How you doing? Stephen Ming here with HomeTeam Inspection Services. I'm here with Brent Troyer of State Farm.
What's up?
And today we're going to talk about protecting your most valuable asset, your home. So Brent, tell people about how would you protect their home?
Well, homeowners insurance is the number one way, obviously. Good news is 90-something% of people have to have it because 90% of people have mortgages on their home, so it's required. But homeowners insurance is how you protect your asset, your largest tangible asset, from sudden and accidental perils or bad things that happen to it, such as wind, fire, water, planes falling out of the sky is actually technically listed, but all the different things like that can happen to your home. And at the end of the day, homeowners insurance is the wallet in that scenario that pays your contractors or whoever to fix whatever it is for a covered loss. One thing I like to educate people on, though, to make sure you understand is homeowners insurance is not a home warranty. It doesn't cover everything, right? So, a Georgia July summer and your air conditioning system pops because it's just working too hard. That's not covered under traditional homeowners insurance. Now, there are ways to add that on, but it's for things that are sudden and accidental that happen, like a burst pipe or a tree falling on your house, right? Or hail damage, windstorm coming through, messing up your roof. All of a sudden you got water coming through your ceiling, those kinds of things. It's not for things that could have been mitigated against, or what we call the cost of ownership. There are some things that, that happen over time, things get older. That's not what homeowners insurance is for, though. So it's things, the two words I tell everybody: sudden and accidental. If it was sudden and accidental, there's a good chance it's covered.
Cool, very good, very good. So what are some other things that you can group in with your home policy that would be as a added benefit for the clients?
So, with your homeowner's insurance, it covers the house, the structure, all that. Of course, then you get a large percentage of that number for your personal property, your stuff, right? I like to say, take the house, flip it upside down, shake it, everything that falls out, that's what falls into your personal property category. Now, there are limits for certain items inside that bucket of money, for things like jewelry is the big one, right? Silver, goldware, computers, sports equipment, collectibles, that kind of stuff. There are limits. Now you can tack that on, schedule that stuff to make sure it is insured to value, the engagement ring and all that. We can cover those, separately with some, with the rider, basically. But a couple main things, to think about, though, on that is, when we're insuring your stuff, it's not what it's worth, it's what is it going to cost to replace it, right? And a lot of people get that in their head. Well, I've had this for 10 years, or I've had this. Okay, cool. So you're probably not going to want to go to Goodwill to replace all your stuff if you have a house fire, though, right? You might want to go get some new things. So when people are evaluating stuff, it's not about what it's worth. It's if you lost it, what's it going to cost to get it and get it new, right? If you don't mind, couple suggestions just for general homeowners tips that I tell people that are relevant for what you do, right? I mean, I think probably roofs are a big part of roof inspections as part of when you're going through, and that's the number one claim that we see too, are roof claims, right? Now, and that can get sticky because of gray areas on how much damage there is sometimes and that kind of stuff. But what a lot of people don't know is most insurance companies depreciate roofs. So for example, a traditional 3-tab, roof has got a 20-year life on it, right? And let's say that it's, $10,000 to replace the roof. You're 15 years into the roof. Well, most insurance companies are going to say, okay, well, we're going to give you 25% of what the replacement value is, less your deductible. So in some cases, you might shake out with $500,000 net, right, and have to pay the rest yourself. State Farm, we do still buy whole roofs as long as there's enough damage to warrant the claim. We don't depreciate roofs, but that is something to be aware of when you're purchasing a home. And someone like yourself says, yeah, this is a 15-year-old roof, it's in good shape, but just know that whoever you're doing business with in your homeowner's insurance, I highly recommend checking with them to see how they handle roof claims. Another part of that roof claim is your deductible. We see it all the time. People are ignorant, and I don't mean that in a rude way, but truly ignorant as to they don't read policy documents. They don't know what their deductible is. Then the claim time comes, and it's a covered loss. That's great. We want to help you. We want to restore you, but you didn't realize you have a $5,000 deductible. And now you're mad at us. Well, we send you a document every year that tells you what that is, just like every other insurance company does by law. Know your deductible. know your number, what a claim is worth to you, right? Obviously, the higher the deductible, the lower the premium. The average homeowner has a claim about once every 17-ish years. So you can do some math there to figure out if you fall into an average statistic, what that could save or based off your deductible. But know your deductible and make sure it's something you're comfortable with, so that if there is a claim, you're not sweating bullets trying to figure out how you're going to come out of pocket with whatever your portion of it is, because all a deductible is at the end of the day is the portion of the claim that you pay. Those are kind of two really big tips that we want to, make sure people understand, that the roof one especially, like understand how old your roof is and what that roof claim looks like.
Awesome. So what are a couple of bullet points that the folks out there can look for when they're shopping for a home policy? First, some things you should look for.
So first and foremost, I encourage you to do due diligence on any company that you do business with. Not all insurance companies are created equal. That is a fact. At the end of the day, you get what you pay for. It's a service, right? And we sell an intangible. We sell a promise. You want to do business with someone, reputable. Obviously, I'm a little biased because I represent the biggest in the land, and we've been the number one homeowners insurer in America since 1964, and we've never missed a year. But first off, understand who you're doing business with. Understand your deductible. Make sure your homeowner's policy is a replacement cost policy, not an actual cash value policy. Actual cash value means after depreciation. Most lenders will not allow ACV policies, but make sure you have a full replacement cost policy so that if there is a large loss that you can be made whole. Sit down with your agent, whether it's me, another State Farm agent, another company. Ask questions. Each company is a little bit different with verbiage. Understand what your loss of use is. That's a big one, or additional living expense where you get put out and you're having to stay in a hotel or rent a home for a while. That varies largely from company to company, and that comes into play all the time. And if you've got a low limit loss of use for only 12 months, that kind of thing, and how many times do we see it take longer than a year to put somebody back into their home in a large loss? Now you're paying the mortgage on the house that's getting fixed and the rent where you're staying, 2 sets of utilities. That could end it. The average American, over 60% of Americans don't have more than 1 month's, bills in reserves. So, that's a big deal. So understand what your loss of use is. Understand how your policy works. You're paying for it, right? At the end of the day, anybody who lives to retirement's age in America and owns their homes and vehicles is going to spend well over a 6-figure sum for property and casualty insurance, whether you like it or not. Aside from buying a house, right, which is what you inspect. That's literally what you're talking about.
Exactly.
Where are you going to spend a 6-figure number and not ask some questions and do some due diligence on it?
Absolutely.
So I would say those are really the main tips: is understanding your policy, understanding your roof coverage, understanding your deductible, and then of course knowing who to call if and when there is a claim. I ask people sometimes who their homeowner's insurance is with. My mortgage company handles it. So you tell me you have a burst pipe like happened 2 Christmas ago when the temperature dropped 20 degrees in 5 minutes. And I personally took 4 calls from 4 different customers on my cell phone at home, right, on Christmas Day. What if you didn't know who to call?
Yeah.
You can call your mortgage company on Christmas Day? Anyway, but yeah, those are some kind of big bullet points for you.
Oh, appreciate that. Well, Brent, if anyone out there has any questions about home insurance or car policies or anything like that, how can they get a hold of you?
You can just Google Brent Troyer. I will pop up. The website's brenttroyer.com. Of course, 770-817-2055. Got a whole team of awesome, remarkable agents willing to help you walk through and navigate that kind of stuff and hopefully save some money in the process, because we know everything's going up these days.
Awesome. Appreciate your time.
Thanks, Stephen.
Well, again, Brent Troyer, thank you for stopping by and sitting down with me. If you have any questions about insurance, talk home insurance, car policies, or otherwise, life insurance as well, call Brent Troyer. He can help you out with that. Of course, if you need a home inspection, give me a call, Stephen Ming at HomeTeam Inspections. Fast, trust, and accurate. That's the HomeTeam.
That's the HomeTeam promise.
See you guys next week.
All right. Thanks, Stephen.